Yo, what's going on? Can I hear Bulls on Wall Street? I want to go over a trade that we took today. This is one of my favorite types of trades, and it's a counter trend trade based on a rubber band snapback. And so, one of the things that you can see about this stock, we made $6,000 today, but 4,000 of it was Nugget, and this thing was at $10, just a couple months ago, and has had an incredible run of recent all the way up to almost $130. And so you can see here its last consolidation was in the $80 range. And so once you're getting into that 120, 130 range, from 80 bucks, I mean, that's about a 50% gain in a matter of a few short days. Okay. And so that essentially triggers an overbought condition where you start to get an extreme overbought condition for what we'd call a rubber band snapback. And so, we love trading with the trend, and I'm always trading with the trend. And we've been longing this nugget really for a good chunk of this year. But at some point, you stretch the rubber band so far that you have to come back the other way. And then the actual probabilities and reward to risk favor you going counter trend for that snapback type of trade. And so one of the things that I look for after a stock has been making such a big run is what we call that last gasp, the sucker's gasp of exhaustion. And so today we saw that at the open, and that gave me the clear all signal to take this thing short. And so when you see the early morning spike, see how you gap and then you spike? That's your exhaustion gap right there. And that's something that we've used just over and over during the years. And so when you get that exhaustion gap, we're shorting into that gap because that's your last gasp. I like gaps. If it's a regular breakout and you're on day one or day two of a move, a gap is actually bullish. But when you're on day 5 of a move, that gap is the exhaustion. And so we're shorting the gap. And then essentially what we're doing is we're playing the trend the rest of the day once the trend holds to the downside. And so, we took this thing short in the 120s and, covering down into the flush. And then what you see here is later on, you're starting to get pops into the VWAP over and over. So see this pop into the VWAP, pop into the VWAP, pop into the VWAP. So these are all potential short opportunities for us to reload. So typically I won't short right at a VWAP. What I'll do is wait for a break over and then back under. It's what we call like a remount or a hold, where you get a red candle to hold it. So, we reloaded some short up here, and then we reloaded again over here. And I actually got stopped out for a loss up here. But when it broke back under, I remounted this thing for that end of the day flush. And we were covering, down our last shares down into the 109s and 110s. And so overall, it was a pretty good trade. And we took 5 or 6 trades in it throughout the day. So, it's, 300, 400 shares scaling in and out. But overall, that's the type of trade you want to see when you go counter trend. And so now that you've had this down day, what we'll be looking for is continued downside for the next couple days. That doesn't mean the trend is over. I don't think so by all. You can see there's still a lot of room to go. But we'll probably have another down day or two before we can start reloading back long. So I hope that helps, guys. And make sure to leave me any comments if you have any questions.